Then when we announced the acquisition, we as in Bridge, we literally had 20x, 10x the number of inbound leads.
Financial services is all about trust. Trust is an easy way to accelerate adoption, awareness.
The difference between success and failure is like so razor thin.
Last year, Stripe announced their largest ever acquisition. They would acquire Bridge for $1 billion. That transaction actually closed last week. And since Bridge is a stablecoin infrastructure provider, it's also the largest ever exit in the history of crypto. Today I'm interviewing Zach, the founder of Bridge, at their offices in Jackson Square in San Francisco. I'm incredibly excited for this interview for two reasons. The first, it's a really short commute. My offices are also in Jackson Square, about 25 yards that way. But secondly, and more importantly, early acquisitions can point to where the future of tech is headed. If you go back to when Facebook acquired Instagram for $1 billion in 2012, or when Google acquired YouTube for 1.6 in 2006, at the time those seemed kind of crazy. In retrospect, they look prescient. YouTube and Instagram are household names, and they've delivered hundreds of billions of shareholder value in the intervening years. So the big question here is Stripe's acquisition of Bridge their Instagram moment? And if so, what does that mean for the future of stablecoins? Zach, thanks so much for joining us, having us here in your beautiful office in Jackson Square.
Yeah, thanks for having me. Excited to be here.
Yeah, so acquisition's closed. What happens to this office? Are you going to shut it down, move to South San Francisco?
No, we're staying here. I mean, we love this. We love the office space. We feel super fortunate to have found it like 6 months ago, and we're building our team here. And Bridge just overall is going to stay as an independent entity, working.
Own brand, own website, emails, office, compliance, licenses.
Exactly. We set up the acquisition such that we could continue to operate entirely as we have been. And then Stripe will become a very large customer and consumer of the Bridge APIs. But overall, we will continue operating as we are. I mean, we built something really special over the last 2 years, and we're sort of very protective of the culture and what we have built, and so are they. Like Stripe, they built something amazing. They know that there's some special alchemy that comes at this stage of a company, and they want to protect it.
Yeah, and it's a decade-long journey. An acquisition, especially this early, is not terminus. It is a beginning, especially when you're still operating independently.
Totally. I mean, this is like, we started the company 2.5 years ago. So we're at like the very, very, very early stages of the company. Like, the average tenure of someone at Bridge is, a year, maybe 6 months, actually.
You're 2.5 years.
Yeah, exactly. And like, this is going to be a many decades long journey. And so this is the start of a new chapter. It's going to be a different journey now that we're doing it with Stripe, one that has like, a lot more brand recognition, a lot more resources and that sort of thing. But it's going to be distinctly different from the Stripe journey. And we're going to have to navigate this like any other startup would. The stablecoin space is super new and is constantly evolving. I mean, the space is wildly different this year, wildly different in like November than it was in October, and wildly different this year than it was last year. And so we're going to have to continue evolving at the speed of this space.
So independent, but there is some alchemy, like why sell at all in the first place?
Yeah, I mean, we didn't set out to sell the company. We set out to like build this for a very, very long period of time. And, when everything started to come together, Sean and I spent a lot of time thinking about it. Ultimately, there were sort of like a couple things that were super important for us. One was that it was pretty clear in the conversations that we had with them that we were very aligned around the
them being Stripe potential. And John and Patrick in particular. I'm sure.
John and Patrick and Sean and I, and like the long-term, the potential impact that stablecoins and like this sort of digital asset space could have on the global financial system. And we as in the Bridge team, it was very clear to us after operating this business for 2 years that, we had a much higher likelihood of getting, maximizing our potential and getting there as fast as possible together with them. And so long as we could remain independent, we could continue to pursue this space as it changes. being able to do that, but with the Stripe resources and the Stripe reach and the Stripe distribution and all the expertise.
And the Stripe brand equity, even if you're independent, they know they put a stake in the ground.
Yeah, totally. It meaningfully accelerates our business. And when the acquisition was, we had all these beliefs around like why this was going to be good for us. Then when we announced the acquisition, we as in Bridge, we literally had 20x, 10x the number of inbound leads, just in that week than we had in like previous months combined. Yeah. I mean, it was like a skyrocketing of our business. And so it was pretty clear that there were, just even at that moment in time, there are hundreds, thousands of businesses who are thinking about investing in this space, and having Stripe behind this thing and making it feel like a much less risky investment was sort of a nudge that many folks needed. And that's just a small fraction of like the opportunity that will be unlocked by combining with them. Yeah.
And financial services is all about trust. And there are other people who do similar kinds of things, but trust is an easy way to accelerate adoption awareness.
Yes, totally. I mean, it is like the financial services space is this like giant network effect business. You have, in order for our business to be successful, there's like multiple other pieces of the ecosystem that need to be turning. And ultimately the thing that like pushes all of this is trust, and so there are folks on the edges of the adoption curve who adopt and begin to pioneer the space. And then that pushes other people to start experimenting in the space. And then, with that, folks like us begin to build our brand and more equity, and that moves more people into the space, and it starts going and going. And this is a massive accelerant to that flywheel.
Yeah. And so in terms of things from Stripe, definitely brand equity, accelerating that path to trust, but you're still independent. Are there other things though? They are a customer as well, but are there other things you've found have been helpful post-acquisition? And then we can go into some of the downsides, because it's hard to integrate things.
Yeah, I mean, there's going to be a bunch of things. So yes, they will be a customer, and so there's a lot of things that they are building with our APIs. And what we have seen, and what Stripe knows to be true, is that when they push forward in a space, it causes a bunch of other folks behind them to see that and either replicate or make their own creative twist on what Stripe does to apply it to their business. And so as we start pioneering and showing the world what is possible in this space, we expect that to have a meaningful downstream impact on our business. They've also helped. There's a lot of functions that we're continuing to build, like our go-to-market function and our compliance operations functions. And there's a lot of things as you go from a small company to a big company. A lot of those problems they've solved. And we get to lean on a lot of the folks who solve those problems for Stripe to help solve those same problems for us. Yeah. And then they also, the other piece that's incredibly important to us is just bank partnerships and other sort of partnerships with other players. Maybe they're banks, maybe they're payment networks, maybe they're wallet or infrastructure providers. And all of those begin to have a different tone.
Before the Stripe acquisition, where were you in your journey of trying to get good, reliable bank partners that would provide you with volume?
We really went through the journey. We started at the bottom, and we crawled our way out of like a deep dark hole, and we were beginning to see the sun, but it was very early. I mean,
even with Stripe, I'm sure you get the conversations, but it's still very...
It's very challenging. And I mean, I think that the combination of the Stripe news and the change in administration and like the change in sort of like the narrative begins to open up more conversations for us. But I would say that even now the switch is not necessarily, it's not like a whole new day. Yeah. But it is meaningfully different than it was 2 years ago. Like we have, and it helps for us. I mean, we've been running our business for 2 years now. We have a relatively long track record, and we have less than 1 basis point of fraud. So, we can go to any bank, we can basically show them this is our history of like what we have done, which is super impressive. I mean, we have less fraud than the bank itself has. We have less fraud than any other, US fintech. We have way less fraud than any international fintech. And so
let's talk about regulatory regime change. So one thing is, you go to the bank, say, I don't have fraud. They say, I don't care. I'm not touching crypto because regulator. Now we have regulatory regime change potentially. How has that changed conversations that you're having as well?
So one of the things I didn't fully appreciate about how the banking world works is that generally a bank, one of the reasons why, I mean, there's a lot that's been written about, choke point and this sort of thing. But one of the drilling down to a deeper level, the way the banking system tended to work is you would have a bank that might work with a company like Bridge, and then that bank has a regulator, and the person at the bank has to explain to the regulator what Bridge does. And the regulator has to understand in some capacity, at least understand well enough such that they can decide whether this business is good or not good. And neither the person at the bank nor the regulator had any idea what crypto is. They're not allowed to use crypto products. They aren't allowed to trade. They aren't allowed to have wallets. They know nothing about this space. So all they know is sort of what's been in the news, which is generally tended to be incredibly negative. So what needed to be true was someone at a bank needed to believe in our business so much that they were willing to go to support us when we had nothing, to support us and go and talk to their regulator and convince their regulator that our business was good. And they had to know our business so well that they could convince someone who didn't know anything about crypto or anything about our business that our business was good. And so the burden was incredibly high. I didn't appreciate that at the time when we were working with bank partners, but this is what made it so hard for us and anybody else in the space to ultimately find a bank partner. Fortunately, we went through many bank partners. Fortunately, we found one, and then ultimately others where we've been able to scale with. But it was. And that's
probably, you find one, you're gated often. Yeah. And so you have to find another at another level scale.
Yeah. Exactly. And
your hope with this regulatory regime change is maybe there'll be more accommodated regulators who will say it's okay to have.
Yeah. And I think that there will be the conversation, what will happen with this regime is the conversation with the regulator will become easier. Yeah. Because the regulator, instead of every crypto product starting at -10 and, maybe you have to get to 8, now they start at 2 or maybe they start at 0 or whatever. Yeah. And the individual at the bank feels more confident that they could go and bring this to their regulator with a straight face. So that they're not going out on a huge limb to propose some crypto product to their regulator. Yeah. And it's still going to be hard because that dynamic still exists, but it's going to be a lot easier than it was before.
Yeah. And I'd love to hear a little bit about risk compliance at Bridge, what that looks like, a little bit about what you do, but also maybe the stories of the people running it. It used to be impossible to find a good general counsel or product counsel who actually understood how to work at a tech company and build like compliance software. There are more of those people today. So talk a little bit about what you actually do, but also the type of team you've put together here.
Yeah, so our business, we have 2 core products. We have our orchestration APIs and our issuance APIs. The orchestration product enables you to take money from, our view is that stablecoins are like a scaling layer on top of fiat. So you can take money from the fiat layer, move it up to the stablecoin layer, move it around and settle it back down. So an example transaction might be business one has US dollars, converts them to stablecoins. Those stablecoins are sent through Bridge and then settle down in Mexican pesos. So you go from US dollars to Mexican pesos via a stablecoin layer. We're definitionally a money movement business, except that it has a crypto flavor and it's generally more complicated and less well understood by banks and regulators and so on than other businesses. When Sean and I started the company, we hired Dan as our first employee. We hired Eric, who's our chief legal officer, as our second employee. Eric was the head of product counsel at Coinbase. He worked closely with me when I was running the consumer business at Coinbase.
Yep.
And
Coinbase, of all the crypto exchanges is the one who said, we will take the regulatorily accepted approach.
Exactly.
And they still got pushback, but they were the most regulatory forward.
Exactly. Exactly. And so he joined us incredibly early in our journey. And that was a big accelerant for the business. I mean, one, you're having a conversation with a regulator and you can bring in a credible chief legal officer.
Yep.
Or
again, it goes back to trust. And Eric's been talking to some of these same regulators, and some of these same regulators, even if you're a new business, are going to be the folks you talk to.
Yeah. In the journey of every company, there are employees that have just some sort of outsized impact on the business. And one of the things I think about with starting a company is you're just sort of like brute forcing luck. So you're like just trying to layer together as many chances as you have of getting lucky in some capacity, and hiring is one of the very meaningful ways in which that happened. And you hear this from so many companies where there's like a whole business line that was just like created by a random engineer or what have you. And we've had that happen on our compliance and risk side. We've also had that happen with engineering, but like Erica certainly have that. We hired another person, Lee, who's our head of financial crimes.
Did I just hear you say that compliance can drive new business lines in fintech? That is an interesting idea.
It is like, Lee, he worked in FinCEN. He knows and deeply understands the regulatory world very meaningfully. And we'll get into some of the business that we do, but like we support, US aid payments that move into Venezuela, for instance. And one of the reasons why we're able to run that program is because of Lee and his support and our ability to work with banks and regulators and like the US government in this case to facilitate those payments. But that
one thing I say about fintech is, if you want to be reductionist, almost every fintech company is really just a regulatory rules engine. Therefore, every product is a regulatory rules engine, and the input to that is good regulatory counsel. And you have to be willing to push some things, work in some gray areas, but because there's not always going to be clear guidance. But that's a big part of what it is. Totally agree.
I mean, I think about the same thing maybe a little bit differently, in that like the thing I love about the space is that there's so many ways in which you can be innovative. And like you see some products that innovate on like the application layer, which like maybe are successful, but rarely are successful. But like the deeper you go into the stack, like the deeper you end up going into like the regulatory bits, the actual money movement infrastructure.
And I want to go there. I want to talk about those like individual things you wish you would build and your team would build, or that someone else would build for you. But you haven't actually talked on that many podcasts because you've been heads down building for 2.5 years. So I do want to quickly cover at least the bridge story. I think, correct me if I'm wrong, 2022 to call it March 2023, things are just pretty hard. It's crypto winter. But then you have a big product launch, early customer adoption. So maybe walk us through a little bit of the early moments of the company and why it was hard, and then get to that moment where you have a big unlock and what drove that.
So we started the company around April of 2022, and we basically started with a different idea, and we pivoted in May of 2022. So that idea lasted like 3 weeks. We raised money on it. And then
I vaguely remember that idea and not thinking it was a very good idea.
It wasn't a good idea. It really was not a good idea. And
had you hired Eric yet though?
No.
So you didn't even have a good team.
No, it was just Sean and I, I think Dan maybe joined before we pivoted. He definitely did actually. But we started off with this idea. We realized it was not going to be very good. I lost confidence in it before Sean did, and it took us some time to get there. And then we pivoted, and it took us a couple of months to land on what became the current version of Bridge. And it was like, for us, it was like when the original idea was doing something with stablecoins too. And when we got to this idea of Bridge, it was like, just in our heads, like, from that moment forward, we encountered a lot of setbacks, but we never really lost confidence in the idea itself. It just kind of like clicked, where it was like, oh, this is going to happen. And the only thing that could be wrong is timing, which is a big thing.
That's a pretty big thing. It turns out.
But we felt very confident that the thesis was correct, and our view was that really simple. There was like two things that need to be true. One is that stablecoins would be really important, and two is that there would be many of them. And if those two things were true, then Bridge would be like super successful. And if only one of those things were true, then we would not be successful.
And if we can get a bank partner within the next 2 years.
And so then we set about getting a bank partner, and we got one. They fell over. We got another. We were just about to launch, and FTX was going to be a customer. Then that happened in November of 2022. Then we got another bank partner, and after Silvergate and SVB, they collapsed. And then we finally got another bank partner that we were able to go live with. And the week we went live with them was the week that SVB collapsed and USDC depegged. And we basically thought, okay, we spent a year building this thing, and we've rebuilt it 3 times on different bank partners. We've had our, first launch blow up because of FTX, which was catastrophic. Yeah. And then we've had our second launch blow up because USDC depegged. And so we thought the following Monday we'd show up for work and Bridge would be worth zero.
And had you raised any more money at that point?
No, we did. So we actually, after FTX, one confirmation came to us and gave us more money. And it was like, I will
and
forever be
grateful.
They invested in prior round, but they basically came. They were like, hey, we deeply believe in what you're doing. Yeah. This could be bad for a long period of time, so you might want some more money to make it through. And it was like, I was incredibly grateful that anyone, is very confidence inspiring for me that someone still believed, that wasn't me, that was outside the company. Yeah. Then we sort of picked up the pieces again. We rebuilt, we launched, USDC depegged, and then fortunately the next Monday after USDC depegged, people came back and still wanted to use our product. And since then it's been like a build. That was the low point of like the entire journey. The USDC depeg was it. If we had to like start over again, that would have been pretty tough for the 4th time. Yep. And I think that like one of the things that happened after the Stripe deal was announced was people just assumed that that Bridge was like one of these AI companies that just kind of like launched and just went like parabolic or something immediately. But we spent the first year in hell. I mean, it was brutal. And then the next, 18 months were extremely good.
You launched your API in like March?
We launched our APIs in March 2023. Yeah. And we launched, so our view was that we held firm on this belief that stablecoins were going to be really important and there were going to be many of them and that our APIs were going to be really helpful. Mm-hmm. But we didn't know exactly who was going to use the product. And
this is what I want to talk about is like first cut. So you need to build the tech, you need to have the insight, you need to have the partners, and then you need your customers. Yes. So APIs out there, docs are live. Who's going to use it?
It was a big question. It was a really big question. So we had 2 customers that were building with us in like the design partner phase, and they were both crypto companies. And our view was that we were going to have our first companies to use us would be crypto companies because they were the ones that were the farthest out on the risk curve. Yep. And then maybe in 2024 we might start to have some fintechs, but it would mostly be crypto companies. And then maybe in like 2029. Or something, we might have like regulated financial companies using us.
Or a corporate.
Yeah, or a corporate. I mean, but we were like, well, that's so far out, like, USDC depegged, we're not even gonna have a conversation with them. Yeah. And so then we launched with these 2 crypto companies and their products were not very successful. So we launched and it was kind of like, we were moving some money, but it was kind of like crickets. And then
hard part about being an infrastructure provider, you can't control for your early customers' success.
Yeah. You hope they integrate and then you hope that whatever they deliver to their end customers is good, but you don't control it. And then we had basically, I didn't know how to get customers, so I would just tweet that, hey, we have Bridge, this is what we do, we just launched. And every time I would tweet,
you'd run the consumer product at Coinbase. So you figured out this whole B2B go-to-market motion.
I had no idea. I didn't know how to do outbound. I didn't know who really wanted this. I had no targeted list of folks to reach out to. So I was just like, okay, Twitter, let's hope, praise be that this works. And And I would tweet, and then lo and behold, we get like 2 or 3 inbound leads. And I had like 1,000, 2,000 Twitter followers, very small.
Yeah.
And one of them turned out to be this company, Zulu, which was a cross-border payments company between Colombia and the US. And they were such a pain in the butt. They were like,
are they still a customer you are talking about?
They're still a customer. Okay. They're still a customer. Esteban and I are Esteban's the founder. We're very close. I'm forever grateful for them, but they came, they were such a pain in the butt. It took what felt like forever to close them, like 6 weeks. And they onboarded, and they showed us the cross-border payment opportunity. We had heard that it exists. This like using stablecoins to move money between different countries, but we didn't really understand how it worked. And they showed us how it worked. They were the first real use case for it. And basically the first couple months of Bridge were Zulu. I mean, we were those first 2 design partners, crickets, and then Zulu went to like $1 million a month, $2 million a month, $3 million a month. And Bridge was like, we're ripping, but really if you looked under the hood, it was just Zulu. And that one customer gave us the confidence.
The flip side of being an infrastructure company is when your customers win, you look great.
Totally.
And you're just doing the same thing you ever did.
Totally. And you know, it was like one of my big reflections at the end of 2023, when I was like thinking back around sort of the success we had, and we had raised from Sequoia and so on, was just the difference between success and failure is like so razor thin. Like if we had not have signed Zulu, we would not have grown at all. At all for our first 5 months. And what would that have done to our confidence? You know, we had just had to rebuild this product. Now we launched the product. There's no volume.
It's the 4th time. You have 2 customers. They're duds. And then third customer.
But we signed Zulu, and they grew, and then Zulu enabled us to see this opportunity. And then once we saw this opportunity, we realized, oh, this cross-border payment thing is real. And then that gave us the confidence when we were introduced to Bitso. That gave us the confidence to have
first you had a product, then now you have a customer that's working, so you have product marketing and a case study.
Yes, exactly.
And maybe even a targeted list.
Exactly.
After Bitso. And then, who is Bitso? Most people should know.
Bitso is the largest regulated exchange across Latin America.
So Coinbase for Latin.
Exactly. And so they have a very large B2B business, which is all business payments running through stablecoin rails. They needed a partner like us to facilitate the other end of these transactions into and out of the US. And so with Zulu, we knew that we could serve this use case. We knew that it was real. We knew that it was valuable to end businesses and end consumers. And so we had the conversation with Bitso. We knew we could serve their needs. We won that business. And we launched with Bitso in like September or so. And then that was like another sort of huge inflection.
And as you can imagine, large company, one of your largest customers then and now.
Totally. And they're still an amazing and very important customer to us.
And what unlocked the Series A? So one confirmation came in when it was hard. Was the Series A off of belief in the category or off of traction with some of these customers?
So it was a lot of it had to do with traction. So we did that, and then in the summer we also had the US aid use case come to us, and that was an inbound opportunity. That was they had long before us decided that they were going to distribute aid payments via stablecoins. They needed a partner to distribute these payments because they send money from the New York Fed to Bridge. We take that money, convert it into stablecoins, and then send tens of thousands of stablecoin payments out to end recipients across LATAM. That is very complicated. They needed a partner to do that. They did not have a partner to do that. And since it is a government program, they need to spend the money in the year. So by the time it got to like midway through the year and they had no partner, they were pretty keen to work with a 3-person startup that
it is amazing. You read these headlines like 100 billion allocated to fix bridges, and then you're like, Nothing has been spent. 50 billion allocated to like help people in war-torn country. We haven't sent the money.
Yeah.
And to your point, there is an infrastructure and product problem. There's also a regulatory risk problem because even though USAID wants to push it out, banking regulator might go to bank. Hey, so you just sent a whole bunch of money to all these individual consumers in Kenya?
Yeah.
Who are they?
Yeah.
That's a hard question to answer.
Totally. I mean, it's a really complicated program to spin up. And they used to run this program entirely on fiat, but 60% of every dollar was reaching the end recipient, and they switched over to stablecoins, and they could start doing it in real time. And it was orders of magnitude easier for them to run the program this way. But the combination of...
And that does help facilitate trust for your other customers. Like, oh, we've got Bitso, we've got a US, like a federal government agency using us.
Yeah, I mean, I'll never forget the government call. It was like a Citrix or, one of those other meeting types that you've never joined. And then it was like...
Cisco WebEx, maybe?
Yeah, and we log into the meeting and it is like 75 people. Like pages of people on the call, and it's just Eric and I.
Niche AI opportunity for like 20 fake employees for calls with the government. That's a bad idea. The government will fire you when they find out.
But basically coming back to the Series A thing. So the combination, like we just had built, at this point, throughout the year, we went from like 2 customers a month, signing 2 developers a month to like 3 to 4 to 5, and layering in a couple like, enterprise type accounts. And so by the time we got to the end of the year, we had like a pretty repeatable motion with some like very clear use cases that were working. Like the cross-border use case was working. The payouts use case, the aid disbursement use case was working. We started to see signs that there was going to be this neobanking use case, which really didn't come until this year, but we started to see signs that was going to work. And so for us raising the Series A, the big moment was when I built the confidence that we could use the money and that we had like a business that was repeatable into multiple deep segments. That's when it all flipped, which was around November, December of last year.
So almost a year ago. So 2022, company almost dies several times. 2023, still almost dies again. Launch product. No one uses product that matters. One person uses it. Bitso uses it. USAID. Raise the A. Okay, and then what was the year of 2024? You got more money in the bank. What do you do next?
2024 was, we
just wrapped it up.
This last year was remarkable for us as a business. I mean, we grew like 20x over the course of the year. The thing that I would say, there were a couple things that ended up like really working well for us. And our business was not one where, there are some companies I feel like where your first product is like so wildly successful and the market is like, so ahead of where your business is that one product just gets like sucked forward, and you just are like scaling. That's like your whole time is just scaling. That was not it for us, because the stablecoin space, everyone's still trying to figure out the use cases, trying to figure out which use cases are going to work, what's not going to work. So the thing that I think that we've done really well is that this year and, beginning, and it started to happen in 2023, is that we just started layering together use cases. And, it wasn't like just one, it wasn't, there's a lot of people might talk about the cross-border or the Treasury use case.
And you're the orchestration layer, but you also have to work with pay in, pay out partners. And that's hard. And
you have to work with them, and the APIs have to change. So like, it's not like we just have one API and then people use it all these different ways. It's like drastically different APIs and ways of moving money to serve these different use cases, because the money needs to move very differently. And like to give one example, we in 2024, this year, we launched a virtual accounts product. This gives you the ability to create a US bank account routing number that sits on top of a wallet. So someone in Argentina could get a US bank account routing number, but they don't get a bank account, but they get a bank account routing number. So you could send payroll to this bank account routing number, Bridge captures it, converts into stablecoins, dropped into a wallet.
Is that a virtual account number on top of a like omnibus account that then you...
No, this is the great thing about stablecoins. You never need omnibus accounts now either, because you can just spin up wallets for every single person. Everything is segregated, and the blockchain, it's like terrible at so many things, but it is a ledger. And it's pretty good at ledgering. And so we basically launched that product, which opens up a whole new market for us. So now a neobank can be launched, built on top of stablecoins using these virtual account numbers. And the previous orchestration product didn't provide these virtual accounts. And so it's hard to get a deposit from a third party and so on. So there's all
so
these...
the third party needs to know nothing about crypto to fund a wallet. They just send it to...
Nothing. And creating that product, coming back to like the financial, creating that product necessitated our like innovation, like pretty deep in the payment stack.
And what bank's behind the routing number, if you can share?
We have multiple banks that we work with, and we don't sort of go into all of our partners, but
it does change.
But this product, these like bank accounts, they were originally created, one of the first use cases for them were rent payments. So it was like a landlord might spin up many different virtual accounts for every single unit in a building, all draining to the same bank account. But so that you knew if a payment came into this bank account number, apartment 1B was paying their rent and whatever. But we basically repurposed a financial product that was built for like rent payments over time to be used for stablecoin payments, that are opening up US dollar accounts basically for folks all over the world.
And for listeners who are curious, there's base layer on top of Unit that does something like this. There are vertical SaaS for landlords. Column Bank does a lot around virtual account numbers, and there are other providers as well. It's become a little bit more common just at the fintech layer to be able to support use cases that are varied, but the same underlying concept.
And so we basically were able to layer together different products that enabled us to open up more and more markets. And what ended up happening for us in 2024 is a lot of those started as small use cases and then became very, very big.
And this is where I talk about building with your customers. Is there like, I need this, I need this, and then you just figure out how to keep building.
Totally. And the whole year was all inbound. It was all like our business has been, it's been shocking to me because my whole career was fintech, but it was all in the US. And almost every single one of our developers is building for some use case outside the US. And there is just so much pent up demand for access to products like what Bridge are building. And so just driving some awareness.
I think American audiences forget that we get to use one of the best products in the world, which is the US dollar. And most of the world, they don't get to use it, and they would love to.
Totally. I mean, one of the things that I'm most excited about, even going beyond the dollar, like, in order to build a fintech application, you need sound building blocks. Those sound building blocks are provided by, banks, and then sometimes the banks, but almost, sometimes not the banks, and sometimes by these like BaaS companies and whatever who are providing APIs on top of the banks. And the US has like a bajillion banks and a competitive market, and so they have pretty decent building blocks that folks can build on top of, but it's still really, really, really hard, really hard. And Europe has fewer, but still pretty good ones, and it's really hard. But imagine if you're trying to build a fintech application in Argentina. Like what bank provides high quality APIs on top of which you could build some fintech application for your audience? Or imagine if you were doing the same thing in Nigeria or Thailand.
Or what do you have for a credible store of value? You don't want Argentine pesos.
Yeah, exactly. And so
they're coming out of their hyperinflationary environment with the new regime, but there's always that risk.
There's still huge demand for dollars. And so stablecoins are, they're providing people with access to dollars who previously could not access dollars, and that is a huge use case. They're also providing a global building block on top of which you can now build a world-class fintech in Argentina, a world-class fintech in Nigeria, a world-class fintech in Thailand, way easier than you could even in the US or even in Europe. And so it opens up, And
stablecoins are now, I think, a top 5, if not a top 10, if not a top 5 holder of US treasuries.
I mean, it's they will be, and I would not be surprised if they become like, number one at some point in time.
Yeah.
I mean, I think there's like,
That's
there
interesting.
should
So
be
2024 is year of shipping product based on customer demand.
Yeah.
You also decided in the summer to move back to San Francisco personally and to open this office. So what, prompted you to move back to SF? You've been here for a decade before.
Yeah.
Left for Austin, came back.
Yeah.
And that was before the Stripe acquisition.
Yeah. We got the office in around March. So the company was just growing to a size where we had started the company remotely. Everybody we had hired, we were friends with. One, I think that's the way a lot of companies start, but also because stablecoins were incredibly unattractive as a place to work. So the only people we could possibly convince to join were people who were just friends with us and felt pity on us. But as once we raised the round from Sequoia, we knew we needed to hire more people. We started scaling out, and we knew it was going to be very hard to build and maintain the culture that we wanted entirely remotely. And we also just wanted to work in the office with people. Like it's fun. It's more enjoyable. I mean, you're doing this thing for a long period of time, and it's better to do
One thing I riff on is the best time ever to build a company. One of those reasons is 3 years ago, it was really easy to get money and really hard to hire anyone.
Yes.
Because everyone was hiring and the big tech companies were hiring if you're in 1,000.
Yep.
Now one of the things you might have done is you went on your LinkedIn, you're like, okay, what senior engineers do I know? And you plug that into LinkedIn, you say first degree connections, and you look at what's geographies and you're like, I know 300 in the Bay Area, I know 40 in New York, and like 50 in the rest of the country.
Exactly.
Where should I put my office?
Exactly.
And so there's just such deep talent networks here. That really matter.
And so we came back, we moved back, and it's been amazing. I mean, we love it here. One of the things I was hesitant about was just time zones, because a lot of our customers are not on the West Coast. It's like the Eastern time zone, we start moving money at 9 a.m. Eastern. We have a lot of customers in Europe and across LATAM. The time zones don't align, but we've been able to work. We have a solid team in New York, so we can have pretty wide time zone coverage. But it's been like, it's been great. And now we have most of the people that we hire are all in San Francisco, and we'll continue to do that. We'll continue to do that.
I'm long San Francisco. I think more people should be long. I don't know why people aren't. It's like network effects kind of matter. We have issues in certain small areas of the city that are huge issues, but the talent networks here are so deep.
I mean, I think two things are true. So I think that when I was starting the company, I was really glad I was not in San Francisco. Not because of anything against like the city itself, but being in San Francisco, there is such a gravitational pull to do a thing. Like right now, I'm guessing everyone in the city feels that pull to do AI or something in AI. And it is like very sort of herd-ish in that respect.
Yeah, and it's hard to put your head down and suffer for 18 months. And have things not work 3-4 times.
Yes, while everyone else is wildly successful. Or perceived to be wild.
You only hear,
signaling.
9 of them are struggling, the 10th one's successful, but 100 people, and so there are these 10 wildly successful people.
Yeah, exactly.
All the time.
Exactly. So that would have been, and I was glad that I was sort of able to distance myself. And you can be in the city and distance yourself, but at least for me, it was easier to distance myself. And then when we started building momentum, it was super obvious that we needed to be here. Like if we wanted to play to win, the best talent is going to be here. And this like, giving yourself a chance to get lucky thing. This is like for building a tech company, there's no other place where you have more random encounters to get lucky.
And that's one thing I tell people is like, why should I be in San Francisco? I'm like, honestly, it probably doesn't matter for the first 3 years.
Yeah.
But if this is a repeat game and the amount of just random things that can happen.
Yeah.
For example, $1 billion exit to Stripe can be facilitated by the geography and the networks of San Francisco.
Yeah. Totally. I mean, I would say the same thing. Like, I think there's a phase of time where it helps to be away from some of the like herd mentality of San Francisco. But Yeah, I mean,
or just inure yourself to it.
Yeah, or be better than I am at tuning it out. Clearly, like I do think that if I was in San Francisco because I was leaving,
but also importantly, before you started the company, you wouldn't have had all those networks if you had not been here.
Yeah, exactly. I mean, and this is like, it's just a great place to be. It's like. For so many reasons, even beyond just starting
January, it's sunny, like go surfing, go outside.
Exactly.
It's a great place.
Yeah.
What do you wish would be built in the stablecoin ecosystem that would make your 2025 better? Because I know there's lots of individual, and maybe this is something you guys would want to build in-house, but you'd also, there are gonna be a lot of people listening, and maybe one of them will reach out to be like, hey, Zach, I'm working on that thing.
That would be awesome. I mean, I think I'll sort of go down a list of a bunch of things that are really top of mind for us. So one is this financial building blocks thing.
Yeah.
I am incredibly inspired and like excited to see folks who are now able to build fintechs to serve parts of the world that have been like completely inaccessible from a financial infrastructure standpoint. You know, you just didn't have the bank partners, you didn't have the card issuance partners, you didn't have the APIs, you didn't have lender, whatever it was that you needed to serve parts of Africa, parts of LATAM, parts of Asia. Now you can do with stablecoins.
Yep.
And I think
part of that is the crypto layer, the stablecoin layer has gotten better. Part is the TradFi layer has gotten better.
Yeah.
Something just like virtual account numbers. It's like a pretty thin, simple product. It's like 2 numbers in a database.
Totally.
But it has some pretty important implications.
Yeah, incredibly important. But now it's possible. I mean, now someone, an entrepreneur could be in Kenya and decide they want to build something, come to Bridge, sign up in a day, start spinning up virtual accounts, spinning up wallets, doing payments between wallets, issue a card, have people spend it. I mean, all of this that would have taken, like if you're a US company, it would probably take you 6 months to do it. You could do it in a week on top of Bridge. It's pretty powerful. The same thing is true as I just talked to another company today that is an energy company. And they are enabling people to pay for energy costs in sort of real time, streaming the payments as energy consumption occurs. This energy company, one of their customers has not served large parts of Africa, large parts of LATAM, because their payment volume, they do tens of millions of payments, which is relatively small. It hasn't been worth the cost of setting up all the infrastructure, setting up the legal entities, doing all the stuff in all of these countries to be able to serve those consumers. And so people often think, oh, credit cards are accepted everywhere, but there's a huge swath of the world that doesn't run on credit cards. Like B2B payments, these payments, and so on. And even accepting credit card payments and requires local entities and so on. And so the other thing I'm excited about is to open up this, like what kind of Stripe did for e-commerce, for SaaS companies globally. I think that stablecoins are going to enable for B2B payments. So now like a Stripe merchant can open up and now the whole world is their audience. You could be this energy company and now, if you're selling, if you want to set up and run your operations in Kenya or Nairobi or Mozambique or wherever, you can do that very, very easily. And I saw this when I was at Square, I saw this when I was at Coinbase. When you lower these financial barriers, it's like hard to predict all the stuff that's going to be created, but there's a meaningful amount of economic activity that wants to occur that is just blocked by the friction. Do
you have any blockers right now? You're like, man, I wish I had this thing built for me that would make.
Oh, I mean, we have 2 years of roadmap of stuff that we need to build. Like a great example is that we are. Most blockchains have relatively low in the payments world TPS limitations, 20 TPS, 50 TPS, 60 TPS, whatever.
Transactions per second.
Transactions per second.
Visa is like 1,000 a second, I think.
And so when we send these payouts, like these aid payments, for instance, when you send, generally the way the banking world works is that because a lot of the actual money movement is really slow, if you were doing an aid disbursement, if Airbnb was doing a payout or something to merchants,
ACH is a batch-based system. You send a
ACH is a
file
batch,
with
exactly.
hundreds or thousands of names.
Exactly.
Yeah.
Exactly. In our world, what we have to do is when we're doing these aid payments to 10,000 people, we actually have to, at the exact same moment, at the exact same time, people are going to scale.ai to like collect their paycheck, all at the exact same moment in time. Or these aid disbursements are going at the exact same moment in time. We have to send out 10,000 payments, 100,000 payments, all at the exact same time. And that just breaks a blockchain. And so there's a lot of stuff that we have to build to parallelize payments, to prioritize payments, and so on, to make this feel as seamless as it can, given the transaction per second limitations of some of these blockchains. Yeah. And so there's a lot that we, the US financial system feels good, but it's, in many ways, but it's sort of because there's been so many layers of services that have been built on top of it to smooth over the rough edges. And we are sort of working now at the base layer, and we feel all of the rough edges. And so we have to build those bits of functionality on top of the blockchain to make it work the way that folks expect it to work. Yeah. And so there's a lot of that we have to build, we have to build. We're also investing very heavily in fiat infrastructure in a bunch of markets outside the US, which the last year we focused overwhelmingly on the US. We're building a cards product. I'm very excited about a cards product. So card issuance today is...
Have you picked a Visa, a MasterCard?
Yeah.
Both?
Yeah, we're gonna be working with Visa.
Awesome.
And the card market today is very balkanized. So let's say you're Coinbase and you serve people in 5 different countries. You have a US card partner and US infrastructure for the US market. You have a European card partner, European infrastructure for the European market. You have Mexican card partner, Mexican infrastructure, Mexican. And it makes it very cumbersome to stand up and run these. Or let alone you're remote.com and you're paying people out in a bunch of different countries, and maybe you want to issue cards to people in all of these different countries. Yep. Well, stablecoins are the first building block that is, you could give a stored balance in the same, unit of account to people in all these different countries. So now you can build one card product built on top of stablecoins for consumers or businesses in dozens of different markets. Yeah. And so now instead of managing 10 different card programs or 5 different card programs, you can have one. And we think this is going to materially change. This isn't like for crypto companies. This is for any company that's global. Yeah. And so we're investing heavily in our card product. So there's a lot that we're sort of, we have years of roadmap.
Yep. No. The Visa one's interesting because it also solves a political problem internally to Visa, which is they divide up the world geographically. And so if you issue cards from one type of card for all the geos, and the internal business units are like, wait a second, who? Yeah. But they've managed to put through that and push through that and invest in crypto connectivity for the Visa network, which is interesting to see. Yeah.
I mean, it is like a lot of the fiat infrastructure is just breaking in a world like imagine you're a crypto wallet. Yeah. And you're a crypto wallet and you want to give your users the ability to issue a card. Well, crypto wallets are financial products that are so much more global than any other fintech. Like if you want to be Chime and issue a card, it's fine. You're in the US and you're US only, or Robinhood, you're US only. Yeah. But Phantom is in, dozens of different countries. So they need a very unique and very different card requirement. And these wallets are the sort of bleeding edge of what's going to be possible and how card issuance is going to work in the future.
And let's talk more near-term product roadmap. So one, card issuance with you guys in partnership with Visa. Other things that folks should be looking out for in 2025?
Yeah, we're going to be adding a lot more. We're going to be adding a lot more fiat connectivity into international markets. We are investing a lot into our issuance product. This gives you the ability to spin up, manage, settle in your own stablecoin. Yeah. The big unlock here is that it gives everybody who's holding a stablecoin the ability to earn yield. Mm-hmm. So right now, a lot of that yield goes back to the issuers themselves. So USDC with Circle or Coinbase or whomever. We think that's like a fundamental building block for.
And that's not how banks work, right? You put your money in a bank account, you, the consumer, get yield. The bank itself gets yield because they're investing in it. But stablecoins, you can't necessarily do that.
Yeah, exactly. So the card product,
yield,
FX markets, yield. We're investing a ton into just expanding our payments capabilities. I mean, this is like our core product. So there's a lot of like, adding new payment rails, adding real-time payment rails, adding different ways of customizing the payment itself, adding, a lot more, as we scale payment reliability, payment speed, all these things become incredibly important. We're fanning out across like new blockchains and new services, and then we're investing heavily in wallets. Because a lot of the folks who come to us need a wallet, but have zero desire to build, spin up, manage, deal with gas, all that stuff. So those are probably be the big pieces for us.
And where are you seeing, so that's product roadmap 2025, where are you seeing volumes start to grow the most in early 2025? So you started with these cross-border use cases, US to LATAM. Where are you getting pulled today?
So right now we have, I would say this building blocks use case where there's a lot of folks who are building neobanks, peer-to-peer payment products, this sort of thing into markets that are very underserved. That has been a very big use case for us. And we're starting to see many of those companies really take off. Actually, late last year, we had customers of ours raised from Sequoia, raised from General Catalyst, raised. I mean, it was amazing to see because, we started the company, we're like, we have no idea if these customers are going to, who are these people? Like, it's just like a random team in Colombia, and now they're out raising really big rounds from great investors. And so that's really starting to take off. The cross-border payment piece is really starting to take off. And like the company treasury management piece where like if you're a company and you're selling services in many different jurisdictions, using stablecoins to pull funds out of those countries and bring them back to the US is also
selling direct to corporates was something you thought in 2022, like not until 2029. Then it turns out SpaceX started using you last year.
Exactly. I mean, this is like
for their corporate treasury.
Coming back to the timing thing is like, we were like, okay, stablecoins are gonna be important. There are gonna be many of them, and like maybe the one thing that's off is timing. And like we were like, well, maybe if we could like serve one corporate in 3 years, and it turned out that the timing was like meaningfully pulled in. Like this market accelerated in a way that really surprised us in 2024.
Thanks so much. It's been super fun. I think one of the things I'm most excited about for fintech, but also the stablecoin ecosystem, is just everything feels super young still. Like you're a $1 billion company that's exited, but you can tell you're really just getting started. You have a lot more work to do.
We feel like extremely fortunate to be in this position, be sort of now working with Stripe in a market that's in its infancy. And be able to really help unlock a lot of the potential for all the teams, all the developers who want to build stuff. We're excited to enable all the creativity in all the developers to unlock their creativity in the stablecoin space.
And if Stripe's lucky, maybe this will be their Instagram moment. $1 billion acquisitions delivers hundreds of billions of market cap to them when they go public sometime, and you guys scale.
We have big shoes to fill.
Big shoes to fill. All right, awesome. Thanks so much, Zach.
Thanks for having me.
If you enjoyed this interview, please like and subscribe. We've got a bunch of other great interviews with some of the most important founders, builders, and investors in the fintech ecosystem.